Welcome to the deep dive. Today, we're plunging into a trade agreement that really looks like it could shake things up. We're talking about the newly finalized India-UK Free Trade Agreement, just inked on May 6th.
Exactly. And we've got a couple of, key documents we're looking at today to guide us.
Right.
There's this analysis EcoFlash, which gives these sort of broader strategic view.
Okay.
And then another one that really zooms in on textiles. Textile UK FTA IU 2025.
Yeah.
It focuses specifically on what this deal means for that sector.
Gotcha. So our mission today for you listening is to really get under the hood of this agreement. What are the big opportunities here for both India and the UK? And, how might this start to reshape global trade patterns, especially for key industries like, well, textiles, as you mentioned, and maybe automotive, too?
Yeah, definitely.
Okay, so let's unpack this. Where did this pretty ambitious agreement actually come from? How did it start?
Well, the journey actually began back in early 2022. That's when the negotiations officially kicked off. But, like with these big deals, it wasn't exactly a straight line.
Right, really is.
There was a bit of a pause, mainly due to general elections happening in both countries. Things stalled for a bit.
Understandable.
But the momentum really picked up again after a key meeting between the prime ministers. That was at the G20 summit in Rio.
Ah, okay.
That meeting seems to have provided the sort of final push needed to get it over the line earlier this month.
So a bit stop-start, but clearly a high-level commitment to get it done. And it sounds like this isn't just, a run-of-the-mill trade deal.
Oh, not at all, no. For India, this is probably its most ambitious bilateral trade pact since the one with ASEAN.
Wow.
And for the UK, well, it's their biggest move on trade liberalization since Brexit happened. So the scale itself tells you we're looking at something pretty transformative here.
Right. Okay, so let's talk numbers. What are the headline targets? What kind of economic impact are we actually talking about?
Well, the main goal is, frankly, huge. They're aiming to double bilateral trade. Yeah, double it, up to around $120 billion. Just for context, right now it's sitting at about $53 billion, which is, roughly 1.9% of the UK's total goods imports currently. So quite a jump.
A massive jump.
And this FTA, it's projected to unlock something like $25.5 billion in sort of new trade flows.
Wow. That's a huge ambition, really aiming to make each other much bigger players in their respective trade portfolios.
Precisely. It's a deliberate recalibration.
And what about the wider impact, like on GDP?
The analysis we looked at suggests an annual boost of around $4.8 billion to the UK's GDP.
Okay.
But what's quite interesting is that the projections hint that the gains for India could actually be potentially even bigger incrementally.
Really? Why is that?
Well, likely driven by India's faster economic growth rate and maybe a greater capacity to sort of ramp up and respond to these new trade opportunities.
That makes a lot of sense. Okay, so what's the main engine behind all this projected growth? How do we get to those big numbers?
Well, a huge part of it is tariff liberalization. Big cuts to tariffs.
Right.
India's committed to getting rid of tariffs on, get this, 99% of its goods exports to the UK by value.
99%.
Yeah. And going the other way, duties on 90% of UK exports to India will be reduced.
Okay.
And the plan is for 85% of those tariff lines to be completely duty-free within 10 years.
So near total elimination over time, that really does sound like a game changer for a lot of sectors.
Absolutely.
Let's dive into some of those specifics then, starting with one you flagged from the report, textiles. Sounds like a big one.
Yeah, this is where it gets really interesting for India. The removal of UK tariffs is just massive for Indian textiles.
How so?
It instantly puts India on a level playing field with its major competitors,
Right.
like Bangladesh, which has GSP access, preferential treatment, and Vietnam, which already has its own FTA with the UK.
Ah, okay, so that sort of 10 to 12% cost disadvantage that Indian textiles had landing in the UK.
Gone. Exactly. This FTA basically wipes that out. And even if you're conservative, you might see maybe a 10% volume increase. That alone could mean an extra $100 to $150 million in exports.
Just from leveling the field.
Yeah, because India's share in the UK market, hovering around 6–10%, was really held back by that old 12% import duty.
And the UK market itself is pretty substantial for textiles, isn't it?
Oh, huge. It's the world's third largest textile market. Imports are around $22 billion a year.
Wow.
And India already has some strengths, right? Abundant cotton, ports are getting more modern, stable macro environment. Plus, we're seeing this trend of production shifting to lower-cost Indian states, like Bihar, MP. That makes them even more competitive.
And are there specific types of textiles where India is particularly well placed to benefit?
Yes, definitely. The analysis points strongly towards knitted, ready-made garments, especially cotton-based ones.
Okay.
There's just a really good match between what India is good at making and what the UK market demands.
Right.
Woven garments, too,
Hmm.
especially the cotton-rich, mid-premium stuff, also looking good.
And home textiles.
Don't forget home textiles. India is already a leader supplying the U.S., even with duties there.
Ah, interesting.
So that really suggests there's strong potential for growth in the UK market, too.
Okay, so textiles look like a major winner. Now, shifting gears slightly, what about another key export sector for India mentioned in the reports? Gems and jewelry. What's the outlook there?
Also looking quite positive. The FTA brings tariffs down to 0 for Indian gems and jewelry going into the UK.
Zero tariffs.
Yeah. And if you look for parallels, remember the India-UAE deal, the CPA?
Vaguely, yeah.
That led to like a 35% jump in jewelry exports to the UAE.
Wow.
Now, if you apply a more cautious, say, 15% volume lift to the UK market because of this deal,
Right.
well, that could mean an upside of maybe $140 to $150 million by FY27.
Just from removing the tariffs?
Pretty much. Direct cost parity plus a nice margin lift for Indian exporters,
Hmm.
which is, crucial in that business.
Right.
High volume, often tight margins.
Makes sense. And engineering goods also got to mention.
Yeah, similar story there. 0 tariffs into the UK market for engineering goods as well.
Okay.
So that should definitely boost competitiveness, open up new doors for Indian manufacturers in what's a really diverse sector.
And this could tie into that supply chain diversification idea, right? Making India more attractive.
Exactly. With 0 tariffs now, India becomes a much more appealing alternative for UK buyers looking beyond traditional suppliers.
Okay. How about agriculture and allied products? That's always a big one for India's economy.
Indeed. And here again, it's pretty substantial. 99% of Indian agri-exports will now get 0 tariff access to the UK.
99%.
Yeah, previously they were facing MFN duties,
Yep.
standard rates anywhere from 2% up to 18%.
Right.
So that's a big change. The analysis does mention several key products within that category that stand to benefit most.
Okay. What about chemicals and pharmaceuticals, another really important area for both countries?
Yeah, here the benefits seem to go beyond just tariff cuts, although there might be some. What seems particularly important is the focus on regulatory streamlining.
Ah, cutting red tape.
Sort of. Things like faster approvals, potentially for Indian pharma products, mutual recognition of good manufacturing practices, GMP standards,
Okay, big.
clearer rules of origin, which matter a lot in complex pharma supply chains. All this should help Indian firms keep their pricing competitive in the UK's pretty large NHS market, which is worth around $30 billion.
Right, maintaining that edge. And auto components. You mentioned potential shifts in supply chains earlier.
Absolutely. With tariff-free access now, Indian auto component makers are really well positioned.
How so?
They could potentially start displacing existing suppliers, maybe from China or Thailand, within the supply chains of UK and maybe even EU car manufacturers, the OEMs.
Interesting.
There could be a really significant opportunity for Indian companies looking to integrate more deeply into those global value chains.
Okay. And finally, just quickly on Indian exports, seafood.
Yeah, another one where the FTA really levels the playing field. By getting rid of the tariffs, Indian seafood exporters are now on par with competitors from places like Vietnam and the ASEAN countries.
And the potential upside there.
The estimate is maybe $200 to $250 million in extra exports over the next 2 or 3 years.
Wow.
Assuming, of course, that Indian producers can scale up capacity to meet that expected demand increase.
Right, capacity needs to follow. Okay, so lots of good news, it seems, for Indian exporters across various sectors. Let's flip it. What about the UK's key export sectors? What are the big wins for them sending goods to India?
Well, from the UK side, a key benefit is the reduction in tariffs on capital goods.
Ah, machinery and things.
Exactly. Those face duties around 7.5% to 10% before. Cutting those lowers the cost for Indian firms wanting to import advanced UK machinery.
So that could boost manufacturing or infrastructure development in India?
Potentially, yeah. Makes that high-end equipment cheaper.
Okay.
And then, of course, there are the iconic UK products. We're expecting pretty significant price drops for things like Scotch whiskey,
Oh, yes, the big one.
where tariffs are set to fall from a massive 150% down to 40%.
150 down to 40, that's huge.
It is. It's phased, but still huge. And high-end cars, too. Duties over 100% coming down to just 10%.
Yeah. Also phased, I assume?
Also phased, yes.
So,
But a dramatic reduction nonetheless.
so does that mean we might see, like, a bit of a boom in India for those premium goods? whiskey, luxury cars?
That's certainly the expectation. Lower prices are likely to spur consumption, especially among, higher income groups in India,
Right.
which could then drive growth in premium retail, the auto sector, maybe even hospitality.
Interesting. Okay, let's zoom out again for a moment. Thinking about the bigger picture, the strategic side of this FTA. You mentioned it creates parity with EU firms in the UK market. Can you elaborate?
Wait, I think you mean parity for UK firms in the Indian market compared to EU firms?
Ah, yes, right. Parity for UK exporters in India. Thanks.
Exactly. So by cutting these tariffs, the FTA basically puts UK goods on the same price footing in India as goods coming from the EU, which currently doesn't have a similar deal.
Okay, levels that playing field.
Right.
And you also mentioned the UK gets a kind of first mover advantage in India compared to other big players.
Precisely. Right now, the UK has this edge. They could have anywhere from a 10% to maybe even a 90% tariff advantage over competitors from the EU or the US who haven't yet signed an FTA with India.
So that could really influence investment decisions.
Absolutely. It could act as a strong magnet, pulling in foreign direct investment, shaping sourcing strategies towards UK-linked supply chains, just because they have that preferential access right now.
And you mentioned this China plus one strategy concept earlier. How does the FTA play into that?
Well, it ties in neatly. There's this global trend of companies wanting to diversify their supply chains, not be solely reliant on China.
Right, de-risking.
Exactly. This FTA gives UK brands a real incentive to look seriously at India as a viable and increasingly cost-competitive alternative for manufacturing and sourcing.
So they could potentially win back market share, maybe in India itself, or even supplying the UK market from India instead of China.
That's the idea, yeah. It provides another strong option.
It really sounds like this agreement is geared towards future-proofing, ensuring both countries stay competitive in a changing global economy.
That's definitely a key takeaway. It's about deeper integration into global value chains, boosting long-term economic resilience for both India and the UK.
Now, India has sometimes been, let's say, cautious in previous trade deals. Are there safeguards built into this one? Protections?
Yes, and that's quite important. India has specifically kept the right to impose emergency tariffs.
Okay. Under what circumstances?
If there's a sudden, unexpected surge in imports from the UK that could be shown to be harming domestic industries.
Oh, like a safety valve.
Exactly. It's a policy tool to guard against potential negative impacts, perhaps drawing on lessons from earlier FTAs India signed.
And we talked about the phased tariff reductions earlier. How does that specifically help Indian industries?
Well, that phased approach, especially for sensitive imports like the whiskey and luxury cars we mentioned.
Right. Over 10 years, under TRQs, you said.
Yeah, tariff rate quotas. Think
Yeah.
of it like a certain amount comes in at the lower duty, but imports above that quota might face a higher rate.
Okay.
This phasing gives Indian domestic industries a crucial buffer. It slows down the market opening, giving local businesses more time to adapt, adjust, and hopefully become more competitive before the full impact hits.
What about the Indian government's finances? Cutting tariffs, especially on high-value luxury goods, must have a fiscal impact, right? Less revenue.
It's an interesting point. Yes, the tariff rate per item goes down, but the expectation, or hope, is that the volume of formal imports will go up significantly.
So more goods coming through official channels.
Exactly. Higher volumes of things like luxury cars being imported formally,
Hmm.
plus the existing retail taxes in India, VAT, GST, might actually offset some of that direct loss in tariff revenue.
So lower rate, but potentially higher overall tax take due to increased sales.
That's the dynamic to watch. They mentioned, for instance, UK whiskey exports could double by 2030. That kind of volume increase helps balance the books.
And it seems like some areas were just kept out of the tariff cuts altogether, completely shielded.
Absolutely. India maintained full tariff protection on quite a few sensitive agricultural goods.
Such as?
Things like sugar, rice, poultry, dairy products. These make up a big chunk of India's agricultural tariff lines.
And protecting those sectors was clearly a priority.
Definitely. It reflects India's focus on safeguarding farm incomes and, rural stability. And frankly, these probably weren't top offensive interests for the UK negotiators anyway.
Right. So overall, sounds like a carefully balanced deal with protections built in. Now, you mentioned the EU might be at a disadvantage now in the Indian market because of this.
That's a really significant potential consequence, yes. While India gets parity with the EU in the UK market now,
Right.
the UK gets this preferential access into India that the EU doesn't have. at least not until an EU-India deal gets done, if it does.
So that first mover advantage for the UK could really shift trade and investment flows away from the EU towards the UK in the India context.
It certainly could. Gives UK firms a leg up for now.
And what about China's position? How does this affect them, particularly in the UK market?
Well, India gaining zero-duty access puts it in a much stronger competitive spot ported to China.
Because China still faces tariffs.
Exactly. China still faces the standard MFN tariffs in the UK. Could be 10-12% on textiles, 4% on footwear, 2-4% on engineering goods.
Right.
So this FTA makes India a clearly more cost-effective option for UK buyers in several important sectors compared to China.
Okay. And what about countries like Vietnam and Bangladesh? They already had good access to the UK for things like textiles and seafood, right, through GSP.
They did. But this FTA essentially restores parity for India. That 10-12% tariff disadvantage Indian clothing faced. Gone.
Levels the playing field again.
Precisely. Same for Indians, seafood, furniture, footwear. They're now on equal footing in terms of landed cost with competitors from ASEAN countries. So it gives them a chance to win back some export market share they might have lost.
The UK also recently joined that big Pacific Trade Pact, the CPTPP. How does this bilateral India-UK deal interact with that?
Good question. Well, the UK joining CPTPP does open its market more to countries like Vietnam, Canada, Japan. This bilateral FTA with India basically preempts any major loss of market share for India and the UK that might have resulted.
Yeah.
India secures its own preferential access, maintaining its competitive edge regardless of CPTPP.
Got it. And lastly, on the strategic front, what about input costs and FDI? Any impact there?
Yeah, the near-zero duties on UK exports like metals and machinery coming into India, that's about £2 billion worth currently.
Right.
That will lower input costs for key Indian industries. Think steel, construction, jewelry making.
Okay.
And when you combine that with the already pretty substantial UK foreign direct investment in India, around $17.4 billion, the FTA is really set to deepen that integration, tighter value chains, stronger investment ties between the two.
And interestingly, you mentioned India might have even got better access in some areas than other countries with recent UK deals.
Yeah, the analysis suggests that in several sectors, India actually secured access to the UK market that's equivalent to, or in some cases even better than, what Australia and New Zealand got in their FTAs with the UK.
Interesting comparison. Okay, let's circle back quickly to textiles, as it seems such a key area. Your report had some fascinating stats comparing the size of Indian textile firms to global rivals.
Yes, it's quite revealing, isn't it? Even with Indian companies investing heavily and generating significant revenue, the combined revenues of all listed Indian apparel and textile firms are still only about 85% of the revenue of just one big Chinese clothing exporter to the UK, Shenzhou International.
Wow, one Chinese company.
Yeah, and maybe only 10 times the revenue of Bangladesh's biggest exporter, Noman Group.
It really puts the scale difference into perspective.
It does. And similarly, the entire market cap, the total stock market value of India's listed apparel and textile sector, is roughly equivalent to just 5 comparable Chinese companies.
So the potential for growth, if they can leverage this FTA, is just enormous.
Absolutely huge, untapped potential there.
And the analysis highlighted a couple of specific Indian companies that seem particularly well-placed to benefit.
It did, yeah. Gokaldas Exports was one.
Okay.
Now, they don't have a huge direct presence in the UK market yet, but they have really strong relationships with major global brands.
That sell a lot in the UK.
Exactly. Brands with a big UK retail footprint.
Yeah.
And Gokaldas is expanding woven garment capacity, setting up knit fabric processing, maybe acquiring a fabric manufacturer.
So gearing up.
Looks like it.
Yeah.
They already have a decent share of India's woven exports, so they're positioning themselves to really capitalize on the FTA.
Okay. And the other company mentioned?
That was Pearl Global Industries. They're interesting because they have a more diversified manufacturing base: Bangladesh, Vietnam, India, Indonesia.
Ah, spread across different countries.
Yeah. And crucially, their factories in Bangladesh and Vietnam already benefit from existing trade deals with the EU and UK.
Right.
So now, with India also getting FTA access to the UK, and maybe future deals for India-Indonesia with the EU, Pearl Global, with its diverse footprint and big clients like Gap, Old Navy, Inditex.
They're really well set up to navigate these changing trade rules.
Very well positioned, yes. They can leverage advantages across multiple locations depending on the specific deal and market.
Okay, so wrapping up this deep dive then, it really feels like the India-UK FTA is, well, a genuinely significant agreement. Lots of potential here. We're seeing huge opportunities for more trade, more investment for both sides, and definitely the potential for some fascinating shifts in global supply chains, especially in sectors like textiles that we dug into.
That sums it up well, I think. The tariff cuts are almost universal, which is massive in itself.
Right.
Combine that with the strategic drivers, diversifying supply chains, companies looking for competitive advantages, it really creates a dynamic and, pretty promising outlook for businesses in both countries.
It's been a really insightful exploration, and it does get you thinking, doesn't it? Given all these new advantages, this closer relationship being forged, what completely new industries or maybe unexpected collaborations might actually spring up between India and the UK over the next, say, 10 years, things we haven't even thought about yet?
That's a great question. The possibilities opened up by this kind of integration are often hard to predict.
Definitely something interesting to ponder. Well, thanks for joining me for this deep dive today.
My pleasure.